Okay folks, let's say that you already have a term insurance plan, okay? You're covered for, let's say, 1 crore rupees, your family is protected and everything seems sorted, you're at peace. Then you come across something called as an accidental death benefit rider. Now it sounds simple. If death happens due to an accident, your family gets extra money on top of your base cover. Now the obvious question is, should you actually take it? Hello folks, I'm Shashank, you're watching Ditto Insurance. At Ditto, we help you choose the right term insurance with IDI certified advisors. There's no spam, no forceful selling and no upselling. If at any point you want help choosing the right term plan or understanding riders like this, you can book a free call through the link in the description. Okay, now let's break this down step by step. Now starting with a quick review, an accidental death benefit rider is an add-on that a lot of people take in their term insurance plan without knowing what it does. See, it increases your payout if death occurs specifically due to an accident. So example, if your base cover is 1 crore and you take an accidental death rider of 50 lakh, then in case of accidental death only, your nominee receives 1.5 crore rupees. But if death happens due to illness or natural causes, only base of 1 crore rupees is paid. Now, here's an important detail. Not all accidents are automatically qualified. The accident must lead to death within a specific time window, usually 90 to 180 days, and it must meet the insurer's definition of accident. So the claim depends on how clearly the cause of death fit those definitions. Now, let's talk about the types of accidental death coverage. Broadly, there are two types. First is the accidental death rider within a term plan, which we just discussed. Second is a standalone personal accident policy, which covers accidental death, but may also include disability benefits, partial disability, and income replacement. And this distinction matters because the rider only pays in case of death due to an accident, but standalone accident policies often cover disability scenarios as well, which are statistically more common than deaths in accidents. Now, coming to plans offering accidental death cover, most major term insurance plans in India offer this rider as an optional add-on. You will see it in different plans across HDFC Life, ICICI Prudential, Max Life, Tata AI, and others. The structure is fairly similar. You choose an additional sum assured and then you pay an extra premium for that rider. Now, let's get into the benefits, because this is where people usually lean towards buying it. Now, the biggest advantage is simple. It provides additional financial protection at a relatively lower cost. Accidental deaths, while less common than natural deaths, can still happen unexpectedly, especially for people with high travel exposure or risky occupation. And you know the halat of Indian roads, so it is highly possible. The rider is also easy to add at the time of purchase, and the premium is quite low compared to the base plan. And even if you purchase a rider, the premium doesn't go super high. So on the surface, it feels like a low cost way to increase your coverage. But now let's talk about the drawbacks. This is where things get more nuanced. Okay? The rider is very specific in what it covers. It only pays out if the death is caused by an accident. This I mentioned, but statistically, most deaths happen due to natural causes like illness, heart conditions, or chronic diseases. So the rider doesn't apply in the majority of real-world cases. Second is it does not cover disability. Accidents are more likely to result in disability than death, and disability can create long-term financial strain because it affects your ability to earn. The rider doesn't help in those situations. Third, there are strict definitions and conditions. If the cause of death is not clearly categorized as an accident, or if it falls under exclusions, the rider may not pay out. Okay, let's talk about premiums. The additional premium for an accidental death rider is usually quite low, but instead of just looking at the cost, it's important to look at what you're getting for that cost. If you take that same extra premium and use it to increase your base term cover, you're actually improving protection across all causes of death and not just accident. Alternatively, you could use that amount to buy a standalone personal accident policy, which covers both death and disability, making it more comprehensive. Okay, so the comparison isn't just rider versus no rider. It's about how you allocate that extra premium for maximum protection. But let's bring this all together with Ditto's take. The accidental death benefit rider is not useless. It can make sense for certain profiles, especially if you have higher exposure to accidents risks or want an additional layer of protection at a low cost. But for most people, the priority should be to first ensure that your base term insurance cover is sufficient. After that, if you want enhanced protection, a standalone personal accident policy often provides broader coverage, especially for disability scenarios. And here's a question that's worth asking. Does this rider actually solve the biggest risks I face, or is there a better way to use this premium? Now, if you're unsure how to structure your coverage or whether riders like this make sense for your situation, you can book a free call through the link in the description. We'll help you break it down based on your needs. I'll see you in the next one. Until then, happy insurance hunting.